All right, good afternoon and welcome to the end of day review for today. And today is May 16, 2024. And we are the day after the CPI data. It's the day whether it's going to make another leg up or it's going to be retracement and reversal. And today is retracement. Perfect setup, a lot of beautiful setup for today. And in time wise, we are in week 20. So, we are in the week of CPI just yesterday, and this Friday is option operation day, option expiration day. And we have 2 more weeks. We will end May, but May is very strong. May money is very strong right there, and so we're looking for the CPI already done. So the next thing we're looking for is what is the end of the month, which is the GDP data release right here. It's gonna be in May 30. And then we go back to the non-farm payroll at the end, excuse us, at the beginning of June again. And then we look for Fed meeting on June 11 and 12. And then we go to the CPI data on June 12. Wow, so huge. Next month, the 12th, the Wednesday is crazy. Wow, we have a Fed meeting and we have a CPI come out at 8:30, and then the Fed meeting gonna be at 2 p.m. So we're gonna see the huge move, and maybe the Fed gonna in and out cutting. So there's a lot of anticipation around that time right there. All right, that's in terms of times why. Where we are at and where we're heading to. The reason why we had to drill this time-wise economic events, because that's our theme. We're gonna trade around that because that's where the liquidity gonna injection make to the markets. In other words, that's where a big move gonna make. And our job is a day trading or swing trading. Is just to catch that move, right? It's a very calculated risk right there. All right, that is, and we go into the chart now. All right, now going to the chart, you see the move is so clean. We get caught up right here, a little bit right here, and we pay for our mistake. I think part of that we still have a little bit FOMO that we try to get rich, but it's still there, and we have to find a way to manage it. But we believe that we manage better today. That's our assessment right there. So basically, let's look at the recording to see what happened at this moment, right? Let's open this so we can view the recording. All right, here's the recording. We start the recording right here is 9:23, so 7 minutes. Early on, when we open our computer and we see this move, we know they're gonna hit this level, and it did. It did hit this level. You see that? Because we see this level, it break, come back, and it make another break, then it's gonna reverse, and we know they're gonna break that. So that is at 6 minutes, 5 minutes before 9:30, and now we're gonna see how we trade this. Okay, at 9:30 right there. So our whole idea is, you see that we marked it level. We thinking about, well, it's gonna make a second leg down. In order to make second leg down, then we believe that it create a fall breakout here. So put a sell stop right here at this level. I think that's the first trade we do. Yeah, right there. So we put sell stop at 9:30. 50 minutes. We put a sell stop at that level, 33.5 right there. So we not enter the trade that we map our level, but I think so. What do we see at that? I think we go too early, right? Let it play out. Especially today, we don't see a gap up or gap down. Yeah, we try to reverse engineer what do we think at that moment that we think they're gonna make a second breakdown, second leg down, right there. Let's see. Okay, that's now we're going 34 right there. All right, we thought, wow, it break the level. There's no reason to come back, but we should wait until this candle formation right there. I think we jumped the gun too early, and we paid the price for that. And that's our first trade we lost, and we blow up our account right there, because yesterday we lost and today we lost again, and we tried to do too quick, too fast. We do 10 contract, and we blow up our 150k account right there. So after 2 days, we make a record right here. After 2 days, we sell for cow, we blow. And the other cow we blow yesterday, which is the cow that we got funded for 50k right there. So we are a cow blower right now. Let's start with that. So we blow up the cow, and then we see that how we fix ourselves. We want to test out all scenario possible. So we want to, let's see how we play out, how our greed and our fear play out. Because in order to manage them, we have to let the hidden part of ourselves to play out. That's the experiment that we try to do on ourselves right now. We have to let the hidden part of us, the fear and the greedy, we have to let it play out. Because that's the beauty of trading. Trading is a avenue or a vehicle that is to improve ourselves right there, or discover ourselves for that matter. And we will not discover ourselves if we don't test it. And that's what we do right now. We try to blow up a cow to see how the fear and grief play out and how it take over us. And we learn that we need to identify, right? We have to identify the object or the subject that we try to manage. And we have to identify them. And then we measure them, how strong it is, how strong our greed and how fear is how strong our fear is and how strong our greed is, so we can identify them, measure them, and then find what triggered that. And then from there, we will manage them. There's no way we can manage our fear and our greed if we don't let it, show itself. We don't let it to be express itself, or manifest itself. And we're so glad that we do experiment. This experiment is really a good chance for the hidden part of us is play out, because trading is the mental game. And how do you play this game? you have to let it go. You have to let it play out. And then you step back and observe and learn to manage it. Otherwise, we have no clue what really make us click, right? Click that, click that, click this, click that, right? We want to know. And how do we want to know? We have to experiment. And when we experiment, we have to let go of the fear. We blow up a cow. Yes, we do. And so far we're good at that. We get funding account. They give it a month, right? We get funding about 12 days, and 2 days after funding, we blow it, and then we open another account. First 50,000. This one, what we open is 150, and after 2 days, we blow it. So that's amazing experience for us right there, and we're so happy that we make those decisions, because that's where we expose who we are really, so we can learn about ourselves. Otherwise, we never learn about ourselves. So the failure is the good thing right there, because that's where we learn what we make it of and how we deal with them. But if we are afraid of making mistakes or afraid of a failure, then we never get to the bottom of that. And sometimes, in order to gain something, we have to lose it first, right? We have to lose it first in order to gain it. So, in other words, no pain, no gain. So the more pain we go through now, the stronger we will get in the future. More pain we get now, the stronger, the more pleasure we're gonna have, because that's human psychic right there. We try to avoid pain and we seek pleasure. That's the principle right there. So we have to put ourselves through pain so we can see what we make up. And when we go through the pain, we know how it's play out and how much we can take it, how much we can manage it. Then we're good. We can handle any situation. That's the idea right there. So we're not afraid. We're not afraid to blow up account and be celebrate, be happy about that. I think we shared that message yesterday. We just want to reiterate that we separate both win and loss, success and failure. So that is the way of life. And one more thing we're going to get into before we go to we jump a little bit right here, but I think it's a good thing. So here's our message right here. We read from the book, right? If you read the book, I think it's all right. If you read this book, you will know what we're talking about right here. It's Relentless. It's from Tim Grover. From Good to Great and to Unstoppable. It's not related to trading directly, but the best part of that is we learn how, the principle right here, and here's is the words wisdom from the author when we deal with failure. He makes 2 points, right? I think the first point we want to make is we have to distinguish between instinct, and impulsive. That's the key word. And in trading, we deal with that issue, every day or every time we take a trade. And the second issue is to deal with failure. And it's a very good read right here. Basically, for many people, failure is the end of life. Only you can decide if something is failure or you are a failure. For most people, let other people make a distinction for them to get into their head where they were like, yeah, I'm a failure. When you don't recognize failure and you know that there are more than one way to get that end result, you don't stop. You don't stop. You do mess up, but you will figure it out. And when you do those things, you trust yourself. That's the key word right there. We have to trust ourselves. The more we fail, the more we trust ourselves. That is the powerful message right there. Because only you can get you out of the challenge or the trouble you're in, or the path that you are taking yourself on. Only you. No one else. You have to be true to yourself right here. You trust yourself. Yes. The more we fail, that's the principle right there. Before we read this book, we thought, wow, we failed, so we lose trust in ourselves, we doubt about ourselves. But he teaches us the opposite. That's the word he say right there. And look at the next one. He said the best of the best, right? We want to be a better of the best. They trust themselves when they fail, because failure brings you closer to the don't think state. This is very critical right there. And we read a lot of books related to trading. And we heard that message before, the don't think state, or in other words they call it in the zone, in the zone right there, in the zone right there. So don't think state, which means we are in the zone. We don't think at all. We just act. We just move effortlessly. And that's all related to failure, because as soon as we remove the fear of failure from ourselves, our mindset, our subconscious mind, then we effortlessly success. Everything we touch is success right there. So that's the beautiful message to do with failure. And every day, every time we take a trade, there a possible 50% it will fail. So we have to find a way to deal with failure in a more constructive way, in a more systematic way that helps us to improve us. So failure is part of the game. The more we fail, the more we trust ourselves. Then the fear is disappear. The fear is gone. Then we trade from the state, the mindsets that do not think. We no longer think. Because when we feel, we think a lot, but when we stop feeling, we just take the trade. We're not thinking at all. And it seems like very counter intuitive, but it's true. That's the ultimate of the so-called in the zone right there. If you read the book, we haven't read that book, but the idea is the same. It related trading, I think, for Mark Douglas. He said trade in the zones. It's the same concept, where you completely in the moment. And he makes some very good statement right here also, because the fellow build the shield for us, and he build a body armor that we all need. We cannot have body armor or that's tough line right there. I think tough line without failure right there. And we learn from that failure, so we don't think there's nothing right there. That's beautiful. We want to share right there. So a little bit, psychology right there. Trading psychology. But anyway, that go here, we just want to get up our mind, our way. So right here, yes. So we go here, we go in right here. We put a sell stop right here. We thought that there's no reason to come back here. The only reason to come back here. Oh yeah, we mistake right there. It will get rejection. Oh, now we see we're wrong. In order for this to be a real a fall breakout, you want it to break above, and then you want another candle hanging above there. That's now we see our floor right there. Now we see that the formal trick right there. It's not a legitimate setup, but the formal trick to click, and that's where we blow our account right there. Yeah, in order for it to be a second leg down, you have to wait for this candle to close above and another candle like a hammer. Look, here's what we're talking about, and today it's perfect setup. You see, let's mark this level. You want it to be a second leg down. You want a one candle close above that level. After it break, it did break right here. Yeah, it's not complete break, but the idea is that you want to second leg down or short on fall breakout or real breakout. Fall breakout to the upside, but real breakout to the outside. Then you have to wait. It's a perfect example right here. You have to wait for this one candle close above that level, and the next candle gonna be a hammer candle, which is tap into retest the level from above, and then where you go into short them, get the second leg down. The same scenario right here. If we want to test, if we want to short the level, we have to wait if this candle close above. Let's say this candle close above, and then you for sure want this candle to tap the level from above. Then the next candle you can short them. That's the idea there. However, in the real time, we see this candle flip. So now we rewind the tap, we see that we make an error right there. An error is come from the formal, and that's the issue that we're working on. Yeah, that's the issue. That's the first trade we take right there. And then that's now we review. So it's very critical for to record and review. We see what error we made. Yep. Yeah. So right here, if you want the same idea right there, we already mentioned, is you want a candle close above that. This one actually one is close above, and this one is what? Hammer, retest from above, then short them. But if it's not, then don't touch it. And this is exactly happened. It's not that setup, so don't touch it. You see? So don't touch this. And you see the magic right here. Right here at 10. We after we blow our real account, we just do paper trade account. And our logic right here, we say, okay, it's close above this one now. So why come back here? The only reason come back at this level is to break it. Well, fine. That's fine. That's the right setup right there. But don't go in right here. The first trade we go in here, we trade with the real account, we make mistake right there. But the second time we entry with a paper account, we get it right. But here's the
markets are open.
Here's the cash. Yeah, you see, we have to aim the target. Otherwise, we will get very tricky right here. Because the market don't want to go down at this moment, because it relates to another setup that we're gonna talk to right after this. You see? So if we go in right here, our target have to be precisely at this level, or at the sell side here, or at the high time frame level at 53.33.25, or the sell side. Otherwise, we will get stop out, or we get stop out. You see, that's the flip at 10 right there. So very critical right there. So when that happens, it tells us the market don't want to go down at that time. But mark this level. Market level, we know it's gonna come back to this level. So basically, we do the paper trail and we get out at a break even right there. But it gives a lesson that if we go into here, we have to target exactly right here. So 33.30, wow, almost more than 1 hour. We talk, gives us 1 hour. We better get out because it's too early to see if they're gonna make. But it's the perfect second leg down. But our goal is tell us that it's not gonna go down because maybe not enough liquidity down here. It needs to build more liquidity. It's the sell side liquidity, and that is the question we have, and we will have an answer to this. And as soon as we see this run up, okay, when and here's another lesson: when we see the flip at 10, then we know that it's.
So basically, we make a mistake when we take the first trade right there. But right here, we did take a second trade. Let's go back a little bit. Yeah, right here. Okay. Let's go back. Okay, let's go back a little bit. Okay, here's the idea. And it makes sense. Here's our second trade. And this trade we take on the paper account, the real account we already, blow it up. So we take paper account and right there. So we do a 4 breakout at this level, 33, 35, 25 right there, because it tests from it break and it tests. Yeah, also now we see the flaw of this trade also. If you want to trade at this, you don't want it to test from below. If you want it to be a second leg down, a 4 break, you don't want to see this test from below. That's it. You don't want to see that. Oh, I think at that moment, even though, anyway, but here's the good, the good thing is it go our way. But the trick right here that we have to target exactly right here. Otherwise, it flip. You see, critical is at 10 o'clock. It flip. That's amazing how the algo is running. You see. So yes. So if we aim right here, we get a 1 hour, a very quick run right there. Less than it's a minute or so, less than 2 minutes. Let's go back to Jory here. You see right there. That's now. You see now it's up close, but it used to be down close, huge down over there. So if we go in, even though we make a mistake, which is 4 breakout at late level, we still make 1 hour right there, if 1 hour. But the logic is don't check a second leg down 4 breakout if we see that it's retest from below. If it retest from below, then likely it's gonna be a real breakout the level. And look at this kind of real flip right there. Now we see. Now we see. I mean, it's so beautiful that we review every day. See what mistake we make, so we're not gonna make same mistake again, or at least help us to define our set of much better, much more accurate, more precise. But in the real time, you see that flip candle right there. You see who gonna say the candle flip? No one know until you see it in the real time. You know it flip. Yeah, right there. So that's our second trade right there. We do the paper trade account, and we put a stop loss right here. We go in, we sell right there, we stop right there. Then we just leave it there. We accept the loss. Because we have to make decision. When is when should we get out and when should we let it play out. That's the decision we have to
constantly make. That's the nature of the game. But now with more practice, more experience, we make that decision much easier. But in this case, it makes sense that you don't do the 4 breakout at that level. It's gonna be real breakout if you see the test from below. Stay away that. Yeah, let's look at the setup we have. Alright, here's an example that you don't want to see that when it breaks the level and then it tests from below. That means it's gonna break level back, right? It tests from below right here, retest. It break and it retest from below, then it's gonna break it. With the condition that we have a leg up right here. So basically this is a signature of retracement, and it's gonna make another leg up. You don't want it to test from below. Similar to here. You see this level right here, the level right there, it breaks that level and it tests from below. You see what happened next? It's gonna break the level. So that's right there. When we see that it tests from below, it breaks tests from below, then the next thing it's gonna do is gonna break that with this one, and it did. And right here it's just another manipulation move right there, just to sweep the low right here or the sell liquidity before it make a second leg up right here. So this is just a retracement. It finished the retracement, it just finished right there. It gives you the finish right there, which is the last sell liquidity rated, and then boom, you see it make a leg up. That means if we go in right here after you see the flip, we go in like there, right there, we're gonna target this buy sell liquidity, and that's it exactly happened. You see the flip right there, man, flip right there. Let's say we go in late in this flip, I mean right there, we still have a good move right there. It's just below 53.37. Go to the chart, 53.37. Right, we go late right here at the flip right there, and we aim for we aim for right here the sell liquidity from yesterday. So we still have a huge range. So just right here, let's say we go with right here to M right here, we have a 1 hour right there. But if we let it run until 10:45, we have another hour right there. So that's another lesson learned for us. When we see the flip at 10, then we can use time-based targets, which is let it run until 10:45. Don't wait until 11. That's where the trouble gonna come if we don't get out. So basically, yeah, we take a pivot trade right here and get out break even. And here the third trade we take, so beautiful. We take this trade as soon as we saw this break the level. The first thing in come into our mind is what? Can you make guess? It's a Yuda swing. It's ICT Yuda swing at 9:30. But in this case, it not only start at 9:30, but start at 9:15. You see that? 1, 2, 3, 4, 5, 6, 7. 7 candle. I mean, almost 2 hours. That's what you call manipulation right there. That's what exactly Yuda swing mean. It's just a manipulation move before it reversed. Expansion move. Look at that expansion. Huge down move to that level. And we did mark this range in our pre-market analysis, and it happened exactly. It's happened right there. In that range right there, above range, sell out and go below that range. But anyway, the good thing today is that we blow up our account. Yeah, that's a good thing. So we can see how how greedy we are and how fearful we are, then how manage. And the second good thing is that we use paper trading account. We pull the trigger for first time in our life, I guess. We apply the ICT model and we pull the trigger. We're a little bit nervous right here when we see it move so strong, but we say, what? If we don't pull the trigger, we'll never get it. We have to pull the trigger. No matter how fearful we are, because it's so strong, right? And especially when you just blow up your account, and now even though your paper account we know it's not really real financial impact, but we still a little bit nervous to pull it out. But we told ourselves, you don't do it now, you never do it. So we pull the trigger. And you know what? After we pull trigger, we see the profit. We do 10 contract, and we see that we can make about $3,000 right there. And then it pull back. We said, what? That's the decision we have to make. Stay in the trade, move stop loss. But we've been there, so we handle much better. We saw that whenever you see a breakdown at 2 level right here, and you see the reverse back right away, that's a signal that that second leg down gonna happen. You only scare when you see this pattern, when you see that it break it down and it tests from below. That where you want it to be get out, because it could be no second leg down. Something like today, like the other day, right here. Yeah, similar like this. But it's not breaking down and breaking back right away like here. But another signal right here, you can see this is totally engulfed this candle. So it gives us a huge signal that the algo is set into the sell to the sell program right there. It's reversed. You see the huge engulf right there, and then it's reversed back right away. This it become our order block right there. This is our block, ICT order block right there. And you see this candle also, it's close above that level with a tap into that level. Surely it's gonna break. Exactly happen. And the beautiful thing is that as soon as we put in this trade and we see through this and this candle, then we just we just walk away. We take a walk like an hour, so we come back and we saw that our target is hit. So let's see if we take the screenshot. Yeah, so basically it's a very beautiful trade right there, and we see through all that, and we aim right at first. We aim right here, but later on we just readjust it. We say maybe it just hit this level because this level it tested before, right, and the key level. So either way, we aim right here, we got it exactly. If we aim right here, we still got it, but we aim right there. So we make 3R and in paper account, so 3R we go in right here. So 3R, 15 is 3R right there. So 1R is about 5 point, right, $250. So 5R is about 3R is 750, but if we 10 contract we 7,000 something. But we win about 8,000 for that trade, even though it's paper money, but it's huge 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 successful. It really lift our spirits up. If for lack of a better word, lift our spirit up. Yeah, here's we trade on the Topstep X platform right there. So we trade with Praxis account 150K, and with that trade we make almost $8,000, and it's from 150, so $10,000. We passed the challenge if we trade a real account right there. But anyway, it's the first time ever we pull the trigger on a setup that we learned from ICT. We start feeling like we're on the right track. Yeah, look at ICT model right here. The Euro swing at 9:30, and how beautiful and accurate ICT give the hint right here. You see the open half, there's no gap. That's the thing we see, there's no gap. And exactly, if we look on the regular trading hour, you don't see any gap. Perfect setup. Alright, here's 50 minutes, and without any gap, you see today it's open 9:30 right there, no gap. And look at the run. Wow. Yeah. If we don't use regular trading hour, we don't see the real market. Then exactly, the Euro swings start at 9:30 right there. Exactly, you see that? Then boom, 11. It coming down. Yeah, and you see how it started. It's open right in the midst of the high yesterday right there. See that? Yeah, the high of yesterday. Yeah, there's no gap, and look right here. That's what. So yeah, in the mid-range of the yesterday high, and the PM section are over there. Yes, it's within that range right there. So it opened within that range. So that's the PM range from yesterday right here. See that? So it opened just right there. Right there. And in this case, it's a bullish scenario, which is rate the low. In this case, bearish, so it rate the high. Very, very accurate right there. This is the first time we see the ICT model right there. Yeah, we're gonna study real hard, so it will be our bread and butter setup right there. Yep, but with the pre-markets, we can see the swing start at 9:15, right? With regular trading, we only see from 9:30. So that's a beautiful setup, man. Just wait for this setup. We don't have to trade much. Once a month, you don't need much. Just once a month, you have huge. You have 5R. Imagine right there, 5R and 10 contract. You make huge money right there. You don't need too much, just once a month. That's an idea right there. Yep, I think, yeah, one more thing we want to share before we close up here is about, oh yeah, the reason why it come to our minds, because also not only Euro swing at 9:30 ICT, but also the Thursday. Remember, Thursday normally is a reversal day, right? After a swing high, it's gonna make reversal day. So that's the reason why I give this setup very high probability right there. And what else we want to share real quick? Okay, the right here we want to share the 4-hour time frame. Here you go. So we find that if we look on 4-hour time frame, can give us a very good picture how the market gonna move for the non-farm payroll or the CPI data. The non-farm payroll is the very first week of the month, and the CPI data I think is the second week. Is that right? Second week or third week? Let's double check real quick. Let's double check real quick right here. So, yep, the first week. In this case, it counts the first week of the May right there. Then the CPI in this case, so the third week. Yeah, but on April, I CPI come out at 10. Yeah. The first Friday. Yeah. The non-farm payroll is just the first Friday of the month. And then the CPI is the second week of the month, because they don't count it to be May. This week is not belong to May. That's why it fall into 15. But if April, you see the CPI on the second week. So basically the second week for the CPI. Alright, go right here, you see that the similar pattern right there. So basically pay attention to this pattern, right? It's the retracement and second leg of non-farm payroll and CPI right there. So it's the first leg and retracement, and then second leg. The same idea right here. Pay attention of the 13 hour, which is 1 p.m. the day before the high impact news release. That's the key signal for to trade right there. Let make a little bit open. Make a little bit note right here so we will not forgot what we're talking about right here. So basically we have the setup, and the first thing you have to have is what? We need to have a first what we call this model second leg up, right? Retracement and second leg up, that's what we call. Or we can apply this the same, right? Retracement and second leg down, just the opposites. So what's the idea right here? What this setup, how it's set up form? All right, first you need to have what? Of course, the first leg up. First leg up must be strong. In this case, we see that it gives us a very strong signal. You see, after this break this level, it break it back, and then it tests from below. You remember this signature, right? When it break the level and it tests from below, that's where it tells you that it's gonna break it back. It's gonna be a real breakout, and we receive additional signal right here. And then you see the first leg up very strong, and the second thing we need to have is so-called retracement right here. And second is retracement. And then the third thing we have is the second leg up. That's it. And how do we know this is the this retracement gonna be just a retracement, not reversal. I mean, just look the signature right there. It needs to have a so-called, in this case, sell-side liquidity. For the retracement, need to have a so-called sell-side liquidity double. How do we know the retracement is N, right? That's the question we asked for. And it must have a double pulse or double sweep. That's the same idea. That's here, double sweep, sell-side liquidity, which is right here. It's very subtle. You see the double sweep, the first candle and then the second candle sweep that, and the last candle gonna sweep the low of those two previous candle. Same right here. But right here a little bit different. That the retracement, the doji candle did not sweep the sell-side liquidity. The second leg up before it moved, it sweep. So you either have the liquidity sweep from the retracement or from the candle that it gonna make the second leg up. So that's the distinguish right there. Yeah, we have to make sure that right here. The liquidity ref, alright, that comes with the verbiage right here, so it can be taken, right? The liquidity can be taken by the last doji right? Doji candle, or the second leg up candle. So that's the distinction there. So we will not be confused. We did confuse it all, but now we watch carefully. We see that we see it different. In this case, we see that the retracement step right there, the double sweep sell-side liquidity is taken by the second leg up candle. In this case, you see that it's with the sell-side liquidity right there of the retracement. But in this case, the perfect scenario is you let the last doji candle check out that. But in this case, it's more subtle that you see that the sell-side liquidity sweep right here by the second leg up candle. But we summarize both cases right there. So that is the thing that we want to find out today. So this will be a framework for when we go into next month, when we trade CBI or the CBI or the non-farm payroll. We have a beautiful framework to working on right there. Let's put some note right here so when we look back we will not confuse. So double, I think they have another term, but that's our term right there. You know, you can help with your own term. I think they call it, what you call that is the triangle or something right here, or some people call it VCB, volatility collapse pattern. That's the typical, for a second leg up right there. But we can call a different name, but that's the same idea. But our language, we come with the term double sweep. I think some of other guys say double burst trader, purse trader, but a little bit hard for us to say which a double sweep. So today taken by the last dozy. That's it. For this, for the non-farm payroll, this is the best setup. We see it light up very nicely right there. And in this scenario, we'll have something different. Yeah, right here. Oh, yep, this candle. We're gonna say right there. Basically, what we call that? We call that, the double or maybe triple double. But the idea is that you must have a liquidity sweep. You're not gonna break it; it just sweep it. It's not gonna run through. It just double sweep, which is social liquidity in this case, taken by the second leg candle itself. It doesn't. So sometimes that's confusion right there. We thought, wow, there's no liquidity sweep. That means it will not be a second leg down. But we have to pay to the subtle difference. The liquidity either sweep by the dozy candle, last dozy candle, or the second leg up candle by itself. Second leg up candle itself. So that's at first we confuse, but the more we observe, the more we take note, we will not be confused. And next time we're gonna pull the trigger without any hesitation. And the same like today, right? We pull the trigger on the ICT. What do we misspell right here? Yeah, itself. On the ICT 930 euro swing nicely, beautifully. That's a huge run for it right there. All right, let's save it. And then let's open this again. We should see that it reflects the change right there. So that's the key thing we want to share today. We use this framework to go in for the next month. We're gonna prepare ourselves for next month. We're gonna trade the CPI or non-farm payroll in June. We're gonna see that. That means that the day before in the PM section, it's gonna be a leg up. Then we know that at 9:30, it gives us 8:30. It's gonna be another leg up. If we see the double sweep, social liquidity sweep, and vice versa. If we see the day before is the leg down, then the next we're gonna see if we're gonna make a second leg down. So that's the same framework right there. One is for bullish, the other for bearish. All right, we're now of time. Thank you for your time and interest. We always grateful for these opportunities. We do what we love, then success coming our way. Bye for now and have a good night, good luck, and good trading. Talk to you later.